are.
Okay. So we are all set up to go. Perfect. All right. Well, welcome everybody. MoneyWise Wednesday. The team is here ready to share something new with you. Actually, we have not taught this webinar ever before. So we're really excited to bring it to you. And we have our fabulous Kelly Merck, who is actually going to be teaching today's lesson because she is the expert on this topic in this group. So no pressure, Kelly. No, you're going to do just fine. So let's just start with a couple of housekeeping things like I always like to start with and remind you that the curriculum that we're teaching from in this webinar, there's a self-guided version available on our website. So if you go to envisioncu.com/moneywise, you can click through to all of this curriculum. And what I want you to look for is the playlist that's called Owning a Home. And then under that playlist, there is a particular module called Mortgage Relief. That's the one that you'll be able to do for self-guided. But today, oh, don't forget when you do complete a whole playlist, which is all the modules in a playlist. This is the exciting part. Like I can't start a webinar and not remind you guys of the bling, right? The money, the cha-ching. $100 Visa gift card we do every month when you complete an entire playlist. So please make sure that you go check that out.
Free money.
Free money, that's right. So in this workshop today, those of you who are watching this are going to learn a lot of stuff that Kelly's going to go over with you. But basically, like to intro it, you're going to learn about different life events that may require you to take a look at modifying your existing mortgage. Okay, we've been talking the last several webinars about understanding how your financial habits impact your credit score, right? As well, and your life situations can affect your credit score. We've talked about debt management. We've talked about budgeting and getting to a budget. And so today it's natural to talk about mortgage modifications because Kelly, the majority of us, the mortgage payment is the highest single item that we pay for in a month, correct?
Correct.
Yeah. So it's a big one. And so some of you guys may find yourself in a life event that has affected your income or your situation that makes it more difficult to make that payment. And for some people, they just suffer through it. But we want you to know that you don't have to. There are alternatives. And so Kelly's going to bring that to you today. And then we will, at the end of the session today, I'll let you know what's coming up for the remainder of August. And we have our webinar schedule set for September. So we're really excited to announce that. So Kelly, yes. I would love it if you would first let everyone know, like tell everyone your history with the credit union as far as your experience and why this is a topic that is so important to you and kind of gives everyone an understanding of, why we're calling you the expert on the matter. So tell everyone a little bit about your experience with the credit union and then just dive us right in. Let's get started.
Okay, I will do that. So I have been with the credit union for 12 years now. Prior to my role in the community development department, I worked with delinquent mortgages, foreclosures, bankruptcies, and things like that. It is so important. We're going to give you a lot of information today, and it may overwhelm you a little bit, but if you're in a situation where you need help, you need to call us. You need to talk with us and tell us what's going on, and we will help you if we can. If you don't call us, we can't help, but it's so important to jump on a mortgage delinquency as soon as possible, even before it happens, if you know it's coming, because as Kelly mentioned, your mortgage payment is your largest payment that you're going to make. Usually, the majority of people, that's their largest payment. And when you get behind on a mortgage, it's almost impossible to get it caught up yourself. That's what we're here for. We're people helping people. We want to help you. We want you to reach out. Even if you're not with us, we want you to reach out to your mortgage lender and get help before it's too late.
Yeah.
So this is just such a great topic for us.
Yeah, it really is a good one. And I know, I think we talked about it last week, maybe the week before, about, Kelly's personal interest in helping people. Her heart, I think one of the things that you actually care about helping members find alternatives. And, I know Herschel's the same way. Like, we believe that knowledge really is powerful. And a lot of times people are stuck in scenarios just because they don't know that there's an alternative. And so we have the privilege and what we get to do here in our department at community development to help educate you and show you that there are alternatives, there are tools, there are resources. That's our job. That's what we get to do every day. And so that's why we're excited to carve out an hour of time to show that, you know, we're here for you and we want you to know about these things. Because you you may be watching this right now and you may go, I don't need to hear this. I'm not having problems paying my mortgage. But
people are. Think of how many people are, Kelly. Like that's like probably the biggest concern for many households right now is, how are we going to pay the mortgage next month?
Sure. And then how are you going to pay it if a life event happens that changes your scenario? Like, you might be comfortable right now, but what you don't know what the future holds, you know?
Or a family member, you know, if a family member is struggling and you have this information and you can say, you know what, I think this is what you need to do. I heard about this. You need to contact your lender, and, you know, you might be helping out your brother, your sister, or your grandmother, or
that's right,
anybody.
Yeah. That's right. Yeah. So for those of you who are joining us live on the webinar, please make sure that you use the Q&A section. As Kelly's teaching you today, we will try to address questions and catch them as soon as we possibly can. Otherwise, we'll do a Q&A at the end. So if you're watching this on the Facebook live stream, please know that we're not going to be able to answer any specific questions that you may have in the comments on the Facebook page. So if you do want to ask a question live, please make sure you go to our website, envisioncu.com/webinars, to click on the link so you can hop in the live webinar with us today and we can address your questions there. All right, Kelly, let's go for it.
Okay, let's go. So in this workshop, we're going to talk about terminology for mortgages. We're going to talk about delinquencies, grace periods, and foreclosures. We're going to talk about the loan default process. So kind of just give you a brief overview of exactly what happens when you default. We're going to talk about events that can trigger foreclosure and how to avoid them. And we're going to talk about the different mortgage modification options that are available. Please note, in this part of it, we're going to talk about some general ones, and then I'm going to give you a little bit of information on what Envision can do for our members that are facing this situation. And then we're going to give you some tips and some resources to help you move forward with the process. So before we get started, we're going to talk about a couple of the terms that we're going to use so that you understand exactly what it is that we're talking about. So when we talk about delinquency, when we say a delinquency, when it pertains to a homeowner, we're talking about somebody that hasn't been able to make their payment during that month. So they're at least 30 days delinquent. They haven't been able to make their payment for 30 days. And it's hitting their credit report, because at 30 days, any delinquency will hit your credit report. And then when we talk about a grace period, so now please keep in mind that grace periods differ from lender to lender and also from products. So if you have with Envision, if you have a mortgage loan, we have a 15-day grace period. And what that means is that's your payments are always due on the 1st of the month. And you have until the 15th of the month to pay without paying a late fee. If you don't pay by the 16th, you get a late fee attached on. So that's our regular mortgage. If we're talking about a HELOC or a different mortgage product, there's different grace periods. So you need to ask your lender what your grace period is for your late fee, because late fees can be pretty expensive when they're associated with a mortgage, because it's usually a % of your mortgage. So it's not going to be a $10 late fee, I guarantee you. It's going to be more like 60, 70, 80, depending on how much you owe. And then the foreclosure is the legal process the provider may initiate if you're delinquent on your loan. So again, it varies from state to state and it varies from lender to lender. But there is a time frame where you can be a certain amount of days delinquent, but after that point, the lender has the right to file the foreclosure action, and it's a legal process. It usually takes a little bit of time, but once it's done and completed, they take possession of your home. You have to move out and they have the right to sell your house. And if they do sell your house and there's money left over, they get to keep it. So we're going to talk about a lot of things to do to avoid that, because That's your house. And believe it or not, most lenders don't want your house. They want to come up with a solution for you to keep your house. So let's talk a little bit more, and we'll go to the next slide here. So we're going to talk about life events that can affect what happens with your mortgage. So there's 3 up on our screen, but we're actually going to talk about 4. So probably the one that most of us think about when we're talking about life events that happen is a change in employment, especially right now. A lot of people have lost their jobs, or they've taken a cut in pay or a cut in hours, and you live up to your means. So if you have a mortgage payment and you've been steady making it all along, but all of a sudden your pay is cut in half, or your spouse loses their job, that's a big event that can happen. And it's really hard to recover from that on your own, unless you have your emergency savings. And we'll talk about that in a minute. Another thing is changes in family. So if you have a new baby, if you've taken in some family members' children and that you weren't expecting, or you have an elderly parent come live with you and there's no extra funding that comes with them. Having another family member is very expensive. You could have an increase of about 30% on your expenses just from having a family member move in with you. And of course, that's going to take a large hit on your income as well. And then changes in health, something that most of us have, well, a lot of us are fortunate to have sick time and things like that. But what you don't think about is, in addition to the co-pays or having to pay out for hospital care and maybe have somebody coming into your house and helping you out, your spouse may have to take off from work to help take care of you or to get you to your appointments and things like that. And if there's a period of bed rest, you may be out of your job for 12 or 14 weeks just for a normal illness. So all those things can affect your ability to make your payment. And then the one thing that's not on here, it's very important, is an untimely death of a spouse or family member. This is one of the biggest ones that we see with the credit union. Is a lot of times older people plan for it, but when you're younger, you don't really plan for the loss of a spouse. And all of a sudden your bills are still the same, but your income could be possibly in half of what it was. And you still have your house payment, you still have everything. And so that's one of the largest ones. And again, one of the most common ones that we see. So it's a very important life event that you need to take into consideration.
Yeah, Kelly, let me ask you just a couple of questions while we're on the slide, because I know you're probably moving into options and things like that. But kind of building on what we've been talking about in the past couple of months with how it affects credit or budgeting and all of those things. I understand that these are things that can be a significant change in income, loss of income, or extra expenses. But let's talk about why should we make payments on time and try to avoid becoming delinquent if possible? So why is it that important? If I'm going to eventually heal from whatever this thing is going on, hopefully, why should it matter? Why shouldn't I just let it stay delinquent for a little bit and ride it out?
It's a great question. Yeah. So, in the past, almost every week we talk about your credit score and how it's affected and how late payments can affect that. And a small late payment can affect your credit. A large late payment, a mortgage payment, not making a mortgage payment can for a couple months in a row can just crush your credit score. It can just, so not only do you have the issue of mentally trying to figure out how you're going to get that loan caught up on your own, because all of a sudden that money that was geared for your mortgage payment is being spent on something else, and it's not coming from somewhere else. So you have to try and figure out where to get that money from, and it's going to affect your credit. So you're not going to be able to go and maybe possibly do a refinance if that's what you were thinking, to lower your payments or things like that, because your credit score just got damaged. So you're going to have that issue. And not to mention the stress and things like that with it, but the biggest part is the effect that it's going to have on your credit for not making the payment.
Yeah, Herschel, did you want to add something?
What? Well, yeah. So Kelly, guess what? So I don't need credit for my utilities. I don't care about paying my utilities at the time. So why should I pay for my mortgage? I need a car to get back and forth to work, to buy food. why is my mortgage so much more profound and important than any of my other utilities, responsibilities, and obligations? Like, why the difference in the emphasis on paying the mortgage? Like, tell us why that is so important. I know you elaborated for Kelly, but a lot of people in today's world are having to discern between paying a car note, a mortgage, or paying for
Right.
the utilities or the
Absolutely.
mortgage. You know what I mean? Like, where does that priority fall on that continuum for paying my mortgage on time?
It should be way up here. Your mortgage payment should be the first payment that you make, because you know what? That is your house. That is your shelter. That is where your family lives. That is where you center your life around. I mean, you have to have shelter for your family. And we're just talking about, I mean, you made a decision at some point. If you're listening to this and you own a house, you made a decision at some point, but that was where you wanted to live. That was where you wanted to have your family. And, you know, you can do with you can have a cheaper car, or you can, you know, you do have to pay electric. So that's a tough one, Herschel. But I mean, that's where you're grounded. That's your home base. So,
Yeah.
you know, and for everybody, it may not be possible. You know, it may be a situation, Herschel, and we'll go into that in a minute, but it may be a situation where that is a tough decision that you have to make. And if it's a decision that you have to make and you've really thought it through, then we're here to help you with that next step.
Yeah.
You know, it can't be, it's not going to be everybody's go-to that their mortgage payment gets made first, because life happens and decisions have to be made. But just know that if you talk with us, we're here to help you.
Perfect.
Yeah, so I want to ask you a question about that. So I know a
Sure.
lot of people really tried to avoid, you know, talking about it or
Yes.
reaching out to
Yeah.
us. And oftentimes I hear stories, unfortunately, of members who are ignoring us or not responding and not reaching out until it's almost too late.
Yes, ma'am.
And I'm sure a big one is pride. A lot of that
Yes.
is pride and just not being able to face the music.
Mhm.
So why is it important for someone to contact us if they've missed a payment or feel like they're going to miss a payment?
So it's important for somebody to reach out to us, because if we don't hear from you, we just assume that you don't want to make the payment. We're not gonna figure out what's going on in your life. Again, I said it before, we don't want your house. We want to work out a solution with you. If I'm calling you, or if one of the member solution specialists is calling you and you're not responding, we just think that you don't care. Or we may think that something happened to you, and then we'll look and try and find out if you're in the hospital or something like that. But we will do our part to keep you in your house. We need you to do your part to let us know what's going on so that we can come up with a solution. I keep saying that we don't want your property. We don't. We're people helping people, but we can't help you unless you reach out to us and tell us what the need is. And, you know, and I know a lot of it is pride. I understand that. We all have pride. That's, you know, but we're people just like you. You know, for 12 years, I was on the other side of the phone, and we've all been there. We've all had life situations that happen that we've needed to reach out to somebody else. And we may have all also been in the situation where we haven't wanted to reach out for help because we were embarrassed, or it was too much, our pride was hurt, or things like that. But that's the only way that you're going to get help, is if you reach out to us, and we will do our part to help you until it's too late for us to help you.
Yeah.
And if they do wait until it's too late, we will try right to the end, but not every lender will. So, you know, that's part of the beauty of being with the credit union, is we really care about our members, and we will do whatever we can do to have a good outcome.
Yeah, very good. So let's move into, like, what are some ways that we can avoid delinquency? I know that you've got some tools in your tool shed there that we can share with everyone. So what can folks do to avoid delinquency if possible?
So the first thing, if you can't make your payments on time, or you can make payments but not the right amount, the first and most important thing is to call us. To call us, reach out to us, tell us what's going on, because we can't do anything to help you until we hear from you. So, and then we have different modifications that we can help you with. So we can modify your loan where let's say that you've got a 30-year mortgage and you're 10 years into it. So you have 20 years left on your mortgage, and we're going to go through some examples, but we have the option to stretch out the mortgage back out to lower your payments. we have the option to do what's called a forbearance. And what the forbearance is it allows you to skip X amount of payments. And again, it depends on what type of mortgage you have and who your lender is. So you're going to want to check with them, but it allows you to skip a certain amount of payments and then put those at the end of the loan. If
So
you're
let's look at that scenario.
Yeah.
Let's talk
let's-
about, just to kind of
Okay.
help make it practical, I guess.
Yes,
Absolutely.
yes.
And I know not everybody is in this, situation, but these are going to be the most common options for change of income.
Right. So in this situation, this scenario, we've got Suki, who's a mechanic, and her hours at the shop have been cut. So she has $1,200 a month budgeted for her mortgage payment, but her current mortgage payment is $1,433. So she's at a deficit of $233 a month. So looking at option one is to lower her interest rate from 6% to 5% and stretch her term back out from 20 years to 30 years. So in doing that, her modified payment will be $1,074. So she's got a budget of $1,200. So that's going to save her, that's going to be under her budget by about $130 or $126 a month. So not
Yeah.
only is it much lower than her initial payment was, but it actually fits into her budget and gives her a little bit of wiggle room.
Yeah. So let me pause there.
Mhm.
So remember we talked about, some of you guys might be going, where did that $1,200 come from? So remember Herschel talked to you guys in our budgeting one about the 50-30-20 rule. And so in order for you, if you want to go find out a little bit more about what that is, I think we talked about it in debt management and in our budget discussion just a few weeks back. So go back to that one and watch that webinar. And that helps you get an idea of what is a realistic number for that particular expense based on my income now. So, we didn't just, I'm sure Suki didn't just pick that number out of the air. Someone probably told her, based on your income, $1,200 a month is a reasonable amount for you to be on your mortgage. And what I think we find with most people, and I know Herschel, you can speak to this too. I'd love to hear your thoughts on this, but a lot of people, it's like they try to modify the rest of their life around the one or two big things that they have instead of thinking about how can I modify the big one and two so that the others don't become so complicated. Am I on the right track by saying that, Herschel?
Absolutely. And with you having the risk that's associated with some of these big dollar loans, that's more of a possibility, and you're prone to have that institution work with you because, again, Kelly has said it a million times. We as an organization, as a lending organization, we don't want your property back. We don't. We want to do everything we possibly can to help you sustain what you have within the realms of your budget or your new or modified budget. So yes, Kelly, you're spot on. Those utilities, things of that nature, you can adjust those based on your time, on your pay scale, right? So if you find yourself hitting a wall after you get paid and that next week a utility bill is due, reach out to those utility companies as well and say, hey, listen, I need to modify my payment date, pay a small portion to get me up to this new date. They'll work with you. That's no different than your mortgage provider. That's no different than your auto lender. That's no different, but reach out to these people. Kelly, you're spot on.
Yeah.
And Kelly, let me just add something to that. And when you're talking about your payments on your mortgage, your wants and your needs, it's important to remember that in a situation where you're not able to make your mortgage payment or you're not able to make your car payment, you need to look at those other things that you may think are needs, but they're really wants. Like you really want the $300 cable package, but you don't really need that $300 cable package. You need your house and you need your car. So, it's time to tighten up a little bit and make some tough decisions about where you're spending money at, because I guarantee you when you call your mortgage company and you're asking for modification, they're going to look at all the spending that you do. So, we're going to do as much as we can, and we want you to do as much as you can to help yourself out.
Right. Okay. So option one you talked about is like the interest rate and the term.
Mm-hmm.
And
we talked
then-
about stretching the term from 20 years to 30 years.
Right.
And seeing the difference on here. Now, option two is the same option of the term of the rate. It's going from 6% to 5%, but we're only going an additional 5 years out.
Okay.
So in both of these, she's still going to be under her budget. She's going to save about, what is that? $31 a month.
Based on her budget amount.
Based on her budget amount, right.
Payment, yes.
Right. Based
She's
on her
saving
budget
a couple
amount.
hundred.
Right.
So let me ask you a question then.
Mm-hmm.
So I'm not refinancing, correct? Suki's not
Correct.
refinancing.
She is not.
modifying existing mortgage. Why is a modification in this case? How is that helpful for her versus refinancing?
So a modification, we're allowed to modify the terms on a loan, and, or, excuse me, we're allowed to modify the rate on the loan, and we're allowed to modify up to the original term without doing a refinance. And the reason it's so much, the reason the option for modification is much better is you don't have all the fees associated with it. So
Which
you're
could
not
be a lot of
refinancing.
money.
Right. You don't have any closing costs or anything like this. Now, unfortunately, if you're at 20 years and your original term was 30 years, but you want to stretch it out to 40, then you would be looking at a refinance. But we will look at every option that we can that's going to save the most amount of money.
Up to the original term. So
Up
if
to
the
the
term was
original
30,
term.
we would never look at a modification beyond 30.
If we did, it would be a refinance.
Sure.
Yes.
That's what I meant within a
Yeah.
modification.
Yeah.
Okay. And
And
is there
so-
a third option that's not
There
listed
is a
here?
third option. And like I said before, it's the one that's that we use most at the credit union. And that is where we already have a member that's past due. And let's say life event happened, they lost their job, but they got a new job and now they're able to make payments again, but they're not able to get caught up because again, your mortgage payment is usually your largest payment.
Right.
So let's just say that they're 6 months past due, the income is there and they're able to make their payments moving forward. We just take the late fees, the interest, the principal balance that's due at the time of the modification and flip it to the end of the loan. And then it turns into a balloon payment at the end. So we're not extending the term. We're not changing the interest rates. We're just moving it because you're able to maintain what you have. And so then what happens is either at the end of the loan, you're going to have the balloon payment, or if you get to a point where you refinance it or sell it, it's going to be paid at the time of the refinance or sale.
Okay. So for those who don't know what a balloon payment is, can you explain what that means?
Sure. So a balloon payment is, let's say you have your monthly payments of $1,000 a month. You get past due and you're past due, let's say $10,000. We take that $10,000 and we put it at the end. Once your original term is up, there's still that $10,000. And what that means is that you have to pay that in one lump sum. to the
Okay.
credit union. Yes, it's a lump sum payment that is due and payable on the date that is specified. So you
So I
can't-
don't know about you guys, but the idea of a balloon payment, like right now, it makes the problem go away.
Mhm.
But then in however many months or years that my term is remaining, that could be a problem is if my spending and my income don't change. So
Correct.
I think that my first initial thoughts then hearing you talk would be, I'm going to do everything in my power over the remainder of the term to maybe make extra payments on that to get that balance down so I don't have to pay a balloon, or I can control how much I pay back. Maybe I can't do 10, but I might be able to do 5.
Yes, and I honestly think that a lot of people, when they do that, because when we do this option with the members, we explain to them how it's going to happen. And I think sometimes they just think, I just need this to go away. And so then they'll deal with that at the time, or they know that they're not going to be in the house to the point where they're going to pay it off, and it's going to get paid off when they sell the property.
Sure.
And that's the majority of what happens. It
Because
just
it buys
gets,
them a bit of time.
yeah.
Okay.
So,
Okay.
so really quick before we move on, all of our viewers, if you guys aren't taking notes, I'll be mortified. Listen, I work in the financial arena, right? This is not my specialty, mortgage refinancing. Herschel's taking notes, guys. Do you understand that? I'm taking notes. I'm not opposed. Listen, I don't know it all. But whenever I've got someone that's in front of me that's sharing this information with the experience and the skill that Kelly possesses, I am taking notes, guys. This is going to be information that I may not need, but she challenged at the beginning of this webinar that if we don't need it, to do what with it? To share it with someone else who does. Kelly, continue. Thank you.
Well, and too, Kelly and Herschel, I think a lot of folks, again, I think people don't think about modification.
Mhm.
They don't, and I don't know that that's a word in the banking world.
Right.
I can't speak for banks,
Right.
but I know in credit unions, modification is a common discussion that we have because it's, we're trying to find a solution that works well for everybody.
Mhm.
And so I think people just think refi. If I can't refi,
Me too.
I'm stuck.
Yeah.
And I've talked to so many people, and when you actually get them on the phone and you start talking, or they'll call and say, I need to refinance my property. They're like, okay, well, tell me what's going on. And then you find out that no, they don't really need to refinance their property. They're just trying to figure out a way to get out of a situation that they're in without having to tell too many people about it.
Right.
Or
Spot
they've
on.
seen it, or all of a sudden they put their house up for sale because they see one of those signs that says sell your house quick, or we can get you out. No, just call your lender.
Yeah.
Your lender
Have a
gave you the money.
conversation.
They're gonna help you if you just reach out to them, because most of the time we can come up with a decent solution. And like I said, with the modification, it's a whole lot cheaper than trying to refinance.
Sure,
And
absolutely.
if you're to the point where you're calling people asking for refi, they're pulling your credit, or your credit's been dinged because you've been late already.
Right.
So call your lender first and see what they can do, and they can look at these different options. But yeah, most people don't think about modifications.
Yeah.
So
All
we're
right.
going to look at modification scenario 2, and that's Don. And Don's spouse was in an accident that resulted in a hospital stay. They have a mortgage and medical bills to pay. So they have $2,100 a month set aside for their budget for their mortgage payment, but their current payment is $2,247. So that's a pretty big difference. So modification option number 1 is to reduce the payment from 7% to 5%, or the interest rate from 7% to 5%, and extend their term of their loan from 15 years to 20 years. So they're going to add 5 years on to their mortgage, and they're going to drop the interest rate. So that's the modified payment for that is going to be $1,650. That's huge. That's a big difference.
It's very big difference.
And then modification number 2 is the interest rate stays at 7%. The loan changes from 15 years to 30 years. And the payment drops to almost the same amount, but look, you're extending that loan out for an additional 10 years versus the 5.
Right.
So although the payment amounts are pretty close to the same, I would be hesitant to do that one if I had a different option, just because you're going to be paying interest for 15 more years.
Right. And it
than what
depends
you
on your
currently have.
stage of life that you're in. If
Yes.
you want to
Mhm.
recommit to another 30-year
Another
mortgage,
30
when maybe your
years.
plan was to have it paid off in 15 so you could retire by a
Mhm.
certain age and all that. Yeah.
And if this is the option that's presented to you, ask them. It doesn't hurt to ask the question, is there any way we can lower my interest rate?
Yeah,
We've
I
already-
wanted to talk about that.
Yeah.
Yeah, I wanted to bring that up because I'm like, do we magically wave a wand and boo, we've gone from 7% to 5%?
Yeah.
Talk to that a bit, Kelly.
So, so a lot of times, first of all, let's just talk about these interest rates. These are pretty high for today's times. If you're talking about going down to 5% a couple of years ago, that would have probably been pretty standard. But if you're at 7%, that means you probably got your loan somewhere around 2004 to 2008, because that was kind of the rates back then. So if your credit hasn't been dinged yet, you may be able to go back down to what it would be if you refinanced it. But you have to ask the question, because they may throw out there 5% and you're just so excited that somebody's willing to do something for you. You're like, yeah, that's great. But never be afraid to ask. Ask, and the worst they can do is say no.
Right.
You've made it this far and you called, but so a lot of time banks and credit unions and lenders have an interest rate that they lend at. They may be willing to go down to that to help you out. You're already a member or a customer if it's a bank, and just ask the question, because the interest rate can save you a ton of money. I would be hesitant, if it were my personal one, I would be hesitant to stick with the 7% and extend out for 30 years. So you have to make some informed decisions too, and not be desperate, because sometimes desperate times people take advantage of people.
Right.
So, and definitely don't go up in interest rate just to get your payment lower, to stretch it back out. So talk to somebody that has the knowledge, and we're going to give you some information, some free resources too, to give you the information of who to contact and what questions you might want to ask.
Yeah, no, this is good stuff. It sounds like there is a lot that kind of determines that rate change, or I'm sure that the balance of the loan and the remaining existing term of the loan, how far out are you going to go? What are the next stages of life? What did I say that I wanted to still do, as far as I'm thinking about, kids in college or retirement. There's a lot of things that it's not a cookie cutter scenario for all of us. there's a lot of different things that might influence why option 1, 2, or 3 would be a good, I mean, I'm sure there's advantages and disadvantages to both. And what I'm hearing you saying is like, you have to take a look at all of those options, put it on paper kind of, and really think about it. Take time to think about what is the best scenario. And of course, we wouldn't advocate or talk to them about an option that doesn't seem to make sense for them in the long run, but yeah.
Yeah, and and so we've talked about the different scenarios, but you also have to look at, what if none of these work for me? What if I don't have the income coming in? And this is always a tough conversation, because some people are just ready to move on, and that's fine. Some people, they love their house, they want to keep it, and sometimes it's not in the member's best interest to keep the house. And so what we do is, when we start this process and we look at the different modification options, before we even get to that point, we've collected information from you, and it may seem that we're asking for a lot, but I want you to think back to when you got the loan, how much information you had to give. You had to give a stack full. We don't want a stack full. We want like this much information. And the reason that we want that information is we want to use our expertise. We want to help you make the right decision for you and your family, so that a couple years down the road, you're not in the same situation. So if you so we're going to ask for pay stubs, and we're going to ask for your budget. And you guys should all have a budget, because we talk about it every week. But we're going to talk about your budget. We're going to talk to you about we're going to get pay stubs. We're going to find out what's going on in your life so that we can help you make the best decision. We're not going to tell you have to do something. We'll let you know what we can do, and we may suggest something to you. But at the end of the day, it's going to be your decision to make, but we are here for you. So, if a modification isn't in the cards for you, let's say that your spouse did pass away at an untimely age, and you're just not prepared for it. So then an option, there could be a couple options of exiting gracefully. And that's what we like to call it, but it's a way for you to get out from under the house without going through the full process of foreclosure. And foreclosure is different in different areas. Like in Florida, a foreclosure process doesn't start till 120 days. And usually it's about 1.5 to 2 year process. In Georgia, it's about a 90-day process once it's started. So you need to really be aware of where you're living and what the circumstances are and who your lender is to know what the process is. But for Envision, it starts at 120 days, and it can either last 90 days in Georgia or about 1.5 years in Florida. And it's expensive and it's time consuming. And at the end, what happens is we do take possession of the property, and we will sell the property. Unless somewhere along the way you're able to bring it whole and continue to make the payments. Another option is to do a short sale. This was pretty popular a few years ago when the housing values all tanked. If we had a member that was not able to maintain their property and they wanted to sell it to somebody, we have an appraiser go out and give us an appraisal value of the property, and we would allow the member to sell it for that, and then make small payments to us each month to pay off the deficiency balance. So that saves you.
Wow.
Yeah. And that saves you from a foreclosure. So you don't have a foreclosure action on your credit, and you're able to get out of the property. And when life events change, you're able to get into a property quicker than it would have been if it was a foreclosure.
Yeah.
Wow.
The home that I bought, the home that we live in now, was a short sale.
Okay.
And I didn't really know much about all of that at the time. There was a bidding war. I do know that. And then I remember at closing, the sellers hugged us. They were so excited, because I didn't realize until after I had researched.
You saved those people's lives, Kelly, without even.
It saved a lot of financial heartache for what they were going through. And I don't know a lot of details, but I can see the benefits of a short sale from being on,
on the other side,
now, of course. But
Wow.
So what's another home loss option? You mentioned the short sale. What's the other one?
The other option is called a deed in lieu of foreclosure. And what that means is you're going to give the house back. We're not going to go through the whole process of filing the foreclosure process in the courts and spending that money. You're going to say, you know what, I'm willing to give the house back to you. You're going to sign it over to us. We don't have to spend the additional funds for the foreclosure, which means that you don't have to pay for them, because when the credit union has to file a foreclosure action, we pay for it up front, but in the end, it's going to be included in the total that you owe the credit union. So it saves you, and at some time, the average up until last year was around 6,000 or 7,000 when you consider the lawyer fees and the foreclosure suit and the whole thing. So
Not cheap.
it saves you a ton of money, and you can set the time. Let's say that
Foreclosure would,
you know, if they say, well, you know what, I'll do a deed in lieu of foreclosure, but I need 3 months to be able to prepare to move out.
mhm.
You know, we'll work with you. You know, you're helping us, we're helping you, and it's also going to help your credit, because it will ding it a little more than a short sale, but it's not going to ding it like a foreclosure. So
Okay.
we're doing
It's almost like there's like a hierarchy, I guess you could say, or a scale, so to speak.
Yeah. And it's,
Okay.
you know, again, the best thing about it, and we've done a couple of these and in my time, but it's a very non-confrontational way to move forward, and you've helped the member because you're letting them, in some parts, you're letting them pick some terms so that they can move on gracefully. And it's just a great option, but you have to have the communication going to do any of those.
Sure.
So we can't just magically do them. You have to communicate and talk. And I'm not gonna lie, there's lots of tears and
Probably more from you than the member.
Can you not tell that like the entire session, there's been a clear sign of passion.
She's cried. She has cried with so many members. I just love that.
Too many.
I'm sure you're probably thinking of individual people
I
right now.
was, yes.
I know she is.
But you know what? The great thing about it is, and this is a little off topic, but the great thing about it is if you're talking to us and telling us what's going on, we can help. And we have another situation, and just, you know, when I said earlier in the beginning to talk to, you know, get this information to share with relatives or friends, we had a member that walked away from her house. She only owed $3,000 in her house. And because one of her relatives told her the house wasn't worth anything because there was a hole in the roof.
So she listened to something someone else
She
said.
listened to something somebody else said
and walked away from it.
She walked away. I continued to call her because I felt like it was very important. And she walked away with a ton of money after we got a realtor to help her sell it.
Good.
And, you know, and that's don't listen to people that don't know.
Right.
Call somebody that does know.
Yeah. So let's talk about the free resources. I think that's a good segue.
Yeah.
You know, I think there are, like, real quick, I know that there are ways to prepare for the unexpected. I don't necessarily want us to, I think we plan to go over a few points, but
we did
go back and watch our emergency savings and planning for unexpected things. We'll talk about savings coming up in September, but go back and kind of look at those things if you are somebody who is trying to figure out how to kind of avoid some of the things that Kelly's been talking about. But we sound like broken records, I know, but having a dedicated emergency savings account so you don't find yourself not able to pay in the event of a crisis, reducing your expenses, so go back to the budget ones, evaluating your need for health and disability insurance so you're protected in the event of an illness or an injury. Those are big for all types of loans, and all types of you know, scenarios. You can buy it outright, even not tied to a particular loan. So, all right. So Kelly, tell us about some of these resources then for folks.
So there's tons of free resources out there to get more information from, and to get some assistance from. There's HUD. So there's the Department of Housing and Urban Development. If you can take a snapshot of this screen and you need the information, take it, because this is valuable. Easy to understand foreclosure information from usa.gov/foreclosure. There's Making Home Affordable. There's USDA, there's Federal Reserve. If you notice, all of these are government related. Don't go out to SaveMyHouse.com or Buy My House. Don't go out to those. These are here for a reason. There's assistance in every city. First of all, there's assistance right over the phone when you call your lender, but they may refer you over to some of these for some supplemental help. There's also the CARES Act, which isn't on here, but the CARES Act just delegated money for people suffering through the COVID situation right now. And there's free money out there. There are guidelines that you have to fall under, but you're welcome to look that up. Just go to cares.gov and look up those resources. There's just so much information out there to get good information from. Don't fall victim to the ones that are not.
Right.
So anything with the government, if you pull it up and it says gov or benefits, USDA is awesome. All of these are great resources to help give you some information besides the information that we've given you. But even at the end of it, make sure you're reaching out to your lender, because that will be your biggest help.
Yeah, very good. Thank you so much.
Mm-hmm. So that's a lot.
Hey,
Yeah.
man, listen, that information was so relevant to right now. I think a lot of our topics are spot on, Kelly, but man, you had me like engaged. I'm always engaged, but this is probably one of the topics that I don't have a tremendous amount of knowledge or skill set in. I can refer to you if I have these questions, but now I feel so much more empowered that I don't have to often refer. I can answer some of these questions. I know where to go and find these resources. I know what more is out there now, just simply based on hearing you talk for the past 35 minutes. And I can't thank you enough for bringing this to the table, Kelly.
47 to be in fact.
47.
Just kidding. I'm just joking. We have an hour. We're fine.
Okay.
Yeah, you know,
But it is good stuff.
Yeah, it's some good stuff, you
Yeah.
know, and honestly, Kelly, I mean, I think a lot of what the feeling surrounding today is preventing a lot of our consumers, our members, and our viewers from progressing into the area of outside of the hardship is pride, right? We understand that. We know that. We can only say that so many times until they understand that they have to pull back. Now is not the time. There are a lot of things that are topics to me that are personal that I like to keep safe, right? That I don't like to talk about. One, because it makes me uncomfortable and it may make the other person uncomfortable. And awkwardness is not something I like being a part of, right? Just really quick, a couple of those things for me are one, my faith, right? Everybody doesn't share the same faith religion, right? The second one is my family. I don't like oversharing about my family because I just don't like exposing myself out there like that about my family, right? And probably one of the most important ones is our finances, right? That makes us very uncomfortable to talk to people about. But now is not the time to allow pride to dictate how intrusive or how private we want to remain whenever we are in a position that we need help. Okay,
Yeah.
we need help. And I think one of the last topics that is very touchy, that a lot of people don't like talking about, is the nasty P word, which is politics. And you can keep that in your back pocket. And I don't care to talk about those. But again, pride is one of the things that will prevent us from having a healthy balance between our life now and our future life to where we want to make it and where we want to be.
Because we're not teaching you, we're not saying, hey, go update your Facebook status to be like, hey friends, how should I avoid delinquency on my mortgage? Like, we're just saying, pick up the phone and call your lender. Have a conversation with that one person, the one person that can actually help you navigate a path out of the scenario or situation that you might be in. Don't worry about everybody else. And just
remember, they're just like us. That's who's answering the phone, and they're people that want to help you. It's people helping people. That's what we do. So make sure you take your steps to make sure that if you think that you're going to run into a delinquency or something has happened where you're scared, call us. Let us know what's going on, because life happens. That's the easiest way to say it. Life happens, and make sure that it doesn't explode into something way worse than it could be just because your pride got in the way or you didn't know who to call, because now you know who to call.
That's right. And it's not Ghostbusters.
No. And you're welcome to call me. You're welcome to call my extension and talk with me if you want to talk to somebody.
Yeah, let's give everyone an email address. So I think if you are someone who would like to know next steps, what to do, whether you are a member with us or not, and you just need a little bit of help, email us directly at community@envisioncu.com. It's just the word community@envisioncu.com. And that email will come directly to the three of us, and we'll have Kelly make sure to reach out to you if you have any particular concerns. If you have a member service representative that you work with that you feel comfortable with in one of our financial centers or in our virtual center, you're also welcome to reach out to them and kind of start that process too. They may be unaware of our webinars, so we have to give them a little bit of information and be like, hey, the cool kids over in community development told me. But just make sure that you reach out for help. Reach out to somebody if you need. Let me see if we have any questions in our Q&A in the webinar. It looks like we do not have any questions, so that's fantastic. I think that means we were thorough and we went over a lot. Kelly, you did a great job. A
We all
lot of
did.
good stuff. It's easy to talk about stuff you care about.
Yes, it is.
Right.
Yep, it really is. All right.
And
Well,
I didn't cry. Yeah,
you did cry.
I didn't.
Well, I don't know. You did this.
Yes, I
That
saw that
counts.
too. Look.
You did the whole
And then the
like,
infamous eye white. Look.
what is it? The girl like cry,
The dry.
fan cry. Yeah.
Uh,
So reminding everyone, please make sure that you go check out the mortgage relief module. It is under the Owning a Home playlist at our MoneyWise page. So envisioncu.com/MoneyWise will click you over to all of that curriculum. You can also access the budgeting stuff, the credit score stuff, all of that information.
Mhm.
You can see past webinars. So if you heard something that you're like, oh, I want to go back and check that out, go to our webinars page, envisioncu.com/webinars. And you can watch all of those. They're embedded right there on the page, as well as see what is coming up next. So next week, we're going to be talking about buying a car, whether it's new, whether it's used, not just the buying process, but the approval process and getting ready for car ownership, or is it time for me? All those things that you need to know about the whole process of buying a car. And so we look forward to chatting with you guys next week. Same place, same time. And we're out of here. Easy peasy.
Thank you, guys.
Bye, guys.
Bye.
Guys,
See you next week.